stop trying to figure out either the market is volatile, will the move be there, will the market move or not, and use the standard deviation instead. This fantastic indicator is going to help you to determine the healthy market conditions and when is a good time to be there when things happen. So let's take a look in the standard deviation, a volatility indicator that measures the deviation in the market from its average in a given period of time, in a specific time. Where do we find this indicator? Let's take a look. We go to the indicator section, volatility, and here you would find the SD or the standard deviation. By default, it comes with the calculation and the application to the simple moving average over a period of 14. You can, of course, change the settings here, as well as predefine the style and the thickness of the lines, as well as the visibility where you would like to see the indicators, what time frame, and of course what chart tag. And once you click OK, this is what you get. In order to understand it, it's very simple here, and yet there are some tricks. When you have increasing numbers, the deviation from the average increases, usually it is a strong indication that the momentum is here, the volatility is here, and the buyers or sellers take the control. This indicator doesn't tell you buy if it goes up, sell when it goes down. No, it simply shows you when the market conditions actually making these highs or downs, the up move or the down move, when it's a good time to participate in trading. And the way that I personally like using that is like in life, after the calm comes the storm, and same in the market. When you are in bullish market and you have sequence of higher highs, higher lows, at some point the market is going to enter a calm phase and pretty relaxed conditions. And in that time, usually the standard deviation is going to be flat and low. And at some point, it will start to increase, as you can see here, making higher highs, higher lows. And when that comes with the breakout of the relaxed period, that means the distance, the deviation from the average in the market increases, and that means the buyers in that case are likely to take the control with the increased momentum and the volatility. And that usually gives a great indication that something is happening in the market, the money flows in, and that's where you would want to be. And when you are in a bearish market condition, for example, when you had a sequence of lower highs, lower lows, you enter some sort of corrections here once again. In that case, it comes with some sort of a range, and the second leg of this range, look what happens here. The standard deviation is low, but then increases, making the higher lows and higher highs, making a massive rally with a very steep angle, completes the breakout, and that means the sellers are taking over again, pushing it with the trend, and that gives a great indication of a strong increasing momentum and volatility. If you enjoy our content, if you would like to learn more, make sure you follow our channel.